Program may be pre-recorded.
The Word on Wealth with Gary Quackenbush is sponsored by the Word on Wealth Radio Network. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now,
live.
All right. Welcome. Happy Thursday, everybody. So glad to have you along. Today is the day that we find all things that we need to know about mortgages and home purchases, because we have with us in studio the one and only John Burroughs. John, how are you today?
I'm good. Aside from those occasional computer glitches and email problems and everything else that goes with all things technical.
John, if you become a Dodger fan, those things stop happening to you.
Yeah, I don't believe that for a minute. So we're going to just ignore those comments. So at any rate, other than that, new glitches, but you know, that's what IT department, information technology. I don't know what we do without those people, but well, I'm hoping that the next day or two I should be back up and running properly. But here we are.
Well, we know that by virtue of the fact that you're on this, you know, on the radio together with me, we know that it's not you, John. It's just the technology, and the technology hasn't crashed just because you're sitting in studio in front of a mic. So that's a good thing.
You know, and I actually learned something, because I'm not, you know, hardware is one thing, obviously the software and the programs, and there'll be IT glitches, but this time we actually think it's a problem with the machine. Now, this is a brand new, couple years old. It's only about 2 years old. Mm-hmm. And I'm being told there might be some glitches within a faulty chip and it's part of the Microsoft system, but it might be part of a faulty chip in the computer. So it's the first time I've ever encountered a hardware problem with my work computer.
Interesting.
This will be fun. Huh?
Yeah, that's interesting. And I like chips.
Yeah.
I like chips.
Yeah, particularly with salsa, right?
That's right. That's probably what they need. They just need some like hot sauce.
There we go.
Pour that in your computer.
Pour a little salsa on the keyboard. See if that fixes it.
That might be the problem, John.
Yeah, well, we're being silly here. Yeah.
Of course.
Anyway, so what's on the agenda here today? Because I'm going to rely on you for my notes, because that was one of the problems. I couldn't get my printout to work properly. The printer shut down and the email shut down. So
it's right there on your phone.
Yeah.
But you know, it's too tiny. So John and I are going to talk today. We're going to help everyone figure out where we are with the housing market. Fannie Mae, Freddie Mac, all these different, these big guys, they're the ones we look at and say, well, what are they up to? What's the world coming to? And John, you had mentioned about that unfortunately, Fannie Mae is starting to come down a little bit, be more of a pain in the neck for self-employed people and alternate income borrowers, because I thought that was fixed. I thought they were doing better, and now all of a sudden they're sliding back into their old habits. Talk to us about that.
Yeah, it is. And the first time around, of course, was due to all the crunch time that came down, and when the market was, you know, squirrely years ago, they got a little tougher on underwriting, and we just had this come out last week, and they're very, very specific in their news reporting and such from multiple entities, saying that it looks like Fannie Mae and Freddie Mac are starting to go backslide a little bit, being a little bit pickier in their examination of the self-employed and or variable or different kinds of alternative income. Like, you know, where before maybe a job change wasn't that big a deal, or if somebody's leaving one field and going to another, you know, if it was, you could put two and two together, a lot of times it was a lot easier. But apparently the underwriting systems and the underwriters, the human beings that verify all the work, are being told, look, we're going to make sure that we meet this criteria a little bit more stringently. And with the self-employed, we might be digging a little deeper. Now, we know how to navigate these waters. We've been here before. But to me, Gary, and tell me if you think this is counterintuitive, to me, if you're in a down market right now and the amount of foreclosures and problems on loan are all-time record low, why would you tighten up in a market that's really performing well already? And if you're trying to encourage people to go out and get mortgages, as long as the the last couple of years, we haven't had any real issues or problems or backsliding from the consumer's perspective. So I make it tougher on them when you're in a down market. And yet this is what happens on a regular basis every time you get these market swings. So it makes no sense. What do you think?
Well, now, John Burroughs, you're actually suggesting that the market should make sense, or that these big companies that are approving mortgages like Fannie Mae and Freddie Mac, that we actually expect them to make sense. It doesn't make sense. You had told me one time, and I was asking him, John, none of this makes any sense. And you said, well, here's the way it works. There's these policies and these plans and these, all these things that this entity is now putting in place, and they're really not going to happen for about a year, 6 months, a year and a half from now. But they're really rolling down this big agenda on how they're going to make the market do its thing and behave and have mortgages be great. And so lo and behold, when this new regulation comes out, they go, oh man, that was bad timing. But they started it so long ago that they can't get the train to stop.
Yeah, you can't slow down. So
That's just crazy.
I don't know, pump the brakes or whatever you want to call it here. But I'm not trying to discourage anybody by any means. It's just being aware that they might get a little bit more scrutiny and just being prepared. Like sources of money, that's a big one for any kind of underwriting, whether it's self-employed or just regular W-2 employee and working folk.
But
like
the
you
thing,
and I, they're going to look at the things, the source of funds. That's a big one. And they're just going to look at those areas that they feel are the most important indicators, and the automated underwriting systems, that artificial intelligence, they know where the hot buttons are.
right. But the only thing this tells me is that don't try to do it on your own. Don't, look for an 800 number. Don't respond to some crazy ad like, hey, we can do it faster than anybody. This is where experience counts, because John Burroughs has been in the industry for 40 years. Call John, 760-944-6555. He's got the new tech. It's not his own tech. It's the tech of the company he's working for now. He is now with American
Pacific Mortgage.
So apmortgage.com. So you can email him. For those of you that like emails so much, it's john.burroughs@apmortgage.com. And write this number down for you, for your family, for whoever. If they're going to buy a house, if they're thinking about buying a house, if they're trying to figure out how much house they can afford, if they're trying to figure out what's happening with the market, should I buy? Should I
90
sell?
seconds.
Call John, 760-944-6555. 760-944-6555. That's what I have my family do. That's what I've done personally. John has been super helpful to me and to my family because he knows all this stuff. And it's not like some new guy that goes, why'd that happen? John, right? It's like,
what happened? Why'd that happen?
Well, wait a minute. But I just had the training last week. And then John just goes, we've done this 4 times in my career. We've seen this 12 times. This isn't new. This is just happening. John is our person that says, you're in Southern California, for crying out loud. You're San Diego. Just buy. Just watch out. If it's really bad, we'll warn you. But here you go. Purchase money applications. This was very exciting.
Mm-hmm.
Purchase money applications doing better.
Yes, actually tick up over the last couple of weeks.
Nice.
1 minute.
Which means that people are starting to come out of their cocoon, so to speak, just a little bit. They're not as fearful of the marketplace. I think your initial drop in prices and such was a little bit of a shocker.
Yeah.
Too fast, too quick, faster than I've ever seen it happen. But the people are now starting to get out there and some activity. We spoke with the realtors last week. We had some conversations about that were pretty good. And I'm keeping my finger on the pulse and just talking to my title reps, my escrow officers, all the people who are involved, and they see those transactions when they come on the board. And I had that discussion Monday evening with my title person. He says, we're finally starting to see a little bit of activity out there.
That's good news.
Yeah,
that's good news. We like that. We always like a strong market, especially with what's going on. You're listening to The Word on Wealth with Gary Quackenbush and John Burroughs, our favorite loan officer. Coming up next, we're going to be talking about the Fed and their increases. Is that going to change? Is that going to be the same? Right. Coming up next on The Word on Wealth.
You don't need to know everything.
You're a rock star.
Find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST.
You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is Faith-Based Investing with Anthony Wright.
Most Christian families don't understand this one thing. The money that you're saving for retirement helps fund the abortion industry as well as other liberal anti-family causes. It's the sad, dirty little secret of American investing world. And here's the good news, though. You probably also didn't know that just a few minutes of your time and we'll screen and clean your investments for you. There's no cost, no obligation. Learn the truth about your own investment mix. Then the choice is yours. Remember, the word says when God's money is in the hands of the righteous, the people rejoice. Well, we also are fiduciary investment advisor representatives. That means that our firm makes a pledge to always act in your best interest. Go to BibleSafeInvesting.com. Download a free copy of my book, Faith-Based Investing, or call me at 931-RETIRED. And please don't forget, listen to Faith-Based Investing this weekend right here on Family Talk.
Gary, your team at GQ Law are experts at solving IRS and state tax problems. Talk about that.
When people have a tax problem, it tends to really stress them out. And one of the things we've been able to do is figure out how to resolve tax problems. One thing we might be doing is setting up a payment plan or getting a collection delay, maybe getting a determination that the person shouldn't have to pay the taxes at all. We do offers and compromise. We do audit reconsiderations. And one of the things that's a really powerful tool that some people don't recognize is sometimes bankruptcy can be used to actually eliminate taxes when there's certain conditions of the code that are met. So we can do all kinds of things. After we analyze your situation, we can figure out what's available, discuss your options, and figure out which ones to implement, what it's going to cost, how long it's going to take. And we can get people out from under all kinds of tax problems so they can sleep again. That's our goal.
Request your free initial consultation. gqlaw.com, 855-500-TRUST.com.
Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST. GQ Law.
You're live.
Welcome to the Word on Wealth. We're so happy to have you along today. We have got John Burroughs, who is our very favorite loan officer. He's a professional. He's been doing this for 4 decades. John's been doing this forever, and he is here to tell us everything we need to know about mortgages, home buying, home selling. John Burroughs, his number is 760-944-6555. We have lines open. I'd love to have you call and ask John a question about your home buying experience. The number is 888-344-1170, 888-344-1170. Call us up. John Burroughs, the Fed has been, I can't say that word. The Fed has been messing with my mind, I think, the public's mind, and just like, we're going to increase, we're going to go up basis points, we're going to do 0.75. What's going on? Is there going to be any change with that? Or are we going to get the Fed coming out again and saying, okay, we're doing it 3% this time?
No, I don't think that's going to happen. Although, as we all know, the markets are kind of messed up on some perspective. Obviously, everything. People are tired of hearing the word inflation in every single news report that's out there right now. But yet you look at the economic news, and I think right now they might have made some of the same mistakes that they did in the past, doing too much too fast as opposed to pumping the brakes, like a year and a half ago, 2 years ago, the handwriting on the wall. But hey, an impossible job. But what I'm seeing now in just even the last 3 or 4 days, working days in the daily reports we're getting is that, yeah, they're going to continue, but will they back off on the amount, the percentage? Whereas the last couple bumps had been 75 basis points, 0.75 in the Fed funds rate, which trickles up to consumer rates like prime rate, et cetera. This is not a direct correlation to long-term interest rates. I cannot stress that enough. And when you get to a certain point, it's kind of the whole hum factors like, yeah, so what? They bump the Fed funds rate again, but that does not reflect to those long-term, 30-year fixed rate mortgages necessarily. So if they back on the percentage this next time, they're thinking maybe a 0.5 point increase, and even as low as a 0.25 point increase. And then how much farther down the road will they continue to do so? Now they have the meetings every 6 weeks. And off the top of my head, I forgot, I had it written down, but the number of, or the dates that this happens. So you're a few days off here. I will look it up when we have our next break here too, as to when the next Fed funds meeting is. And that's when they decide if they're going up, which we're pretty sure they will, but how much, and will they start to taper back a little bit? So
Interesting.
we'll see how that goes. We'll do a little bit when we get around to the last meeting of the year. I'll pull together some notes and such, and we'll do a show focused on what the Fed is all about, what their job is, how this works, what are the ramifications of doing these bumps on rates, both short and long term, and dig a little deeper, because it is interesting stuff. There's no doubt about it.
Yeah, and it affects all of us, in one way or another. So I think it's great. Yeah, looking forward to that. Paying off your home loan with sale or refinance. You said that there's some confusing parts we should know about, beneficiary versus servicer, because that's what's confusing. Because I'll have people that will come into me and they'll say, well, I have a trust. And I go, okay, no, it's like, no, you don't. But it's like, what makes you, well, because right here, I have this trustee that says right here. In fact, there's a trustee transfer, or somebody will come in and tell me about that, about their parents have passed away. And they're saying, yeah, my dad had a trust. It's right here. And it says substitution of trustee. And I said, well, that's not really what that means. I'm going to have John explain that stuff.
Yeah. Well, we ran into this on a transaction that's going on right now. And I saw the handwriting on the wall in that we're dealing with a first trustee, which was a lender on the home, and properties being sold. And typically speaking, the escrow officer's role is she'll gather the information from, the seller of the property and say, well, who's your lender, and sign this authorization so I can order a demand payoff. Now that demand is more or less the escrow officer going to the lender saying, hey, as of the last payment received, how much is owed on the principal? What are your fees for paying you off, Mr. Lender, Mr. Note Holder? And the interest payoff or the per diem you're giving me is through such and such a date. So if we go past that date, I have to update that info. And most of the time, 99% or 90% of the time, that's usually not much of a challenge, except for when you get a transfer of the loan. Everybody listening that's a homeowner, has had a mortgage for any length of time, a couple of years, has probably seen the lender name or the servicer on the loan change hands. That means that Sendlar Corporation sold it to PHH Mortgage, who's servicing for Fannie Mae. The whole idea is the servicer's job is to keep track of all of this information. Well, if there's been a recent transfer, and of course, we have zero control over that. So then you have to do a little bit of scrambling. So being on top of that as the seller of a property to avoid delays, making sure escrow has all that information. In the transaction we have right now, there is a second trustee lien in place that was an equity line of credit.
Mm-hmm.
Now, the balance on the equity line of credit is zero. In other words, the seller of the property does not owe anything to the lender because that loan was paid off. However, it was never reconveyed. They never removed the lien because in theory, as a HELOC, they could technically go out and borrow against it again tomorrow.
Okay.
So the escrow officer has to put out what they call a zero demand, meaning we know you got a zero balance, or please correct us if we're wrong. And then what are your fees for filing the reconveyance deed, preparing it? Because anytime you pay off a lender, they're going to have another, 100, 200. In this case, the second trustee note holder has a $340 charge for recording of a deed, preparing of the deed, their servicing. And this lender is not particularly user friendly. And we knew that going in. So I was instructing the escrow officer and the realtor involved. I said, you better stay on top of these folks. And luckily, I have a working relationship, having done enough transactions with them. And they're a California-based lender, and they're a little quirky. But realize that if you're the seller on a property, there's a difference between the beneficiary. That's who you owe the money to. But the servicer, the person you're writing the check to, they don't usually, you don't owe the money to them. They're just taking care of the paperwork and the servicing and registering payments and keeping everything up to base and then cooperating with the escrow. So be aware of the beneficiary, who you owe the money to, and the servicer in 99% of the time are two different entities. Rare is at the same party. Sometimes banks, but in most cases, it is not. So be aware that you can run into some issues by no fault of anybody on the transaction, other than the, slowpoke servicer or we'll get to it when we feel like it attitude, and that can mess your deals up. So just stay on top of that stuff, folks.
Good to know. All right, John, thank you. John's number 944-760-944-6555. John's here to help us understand all this stuff about mortgages. John, the question, what about this when you have the servicer will change? It'll move from one to the other, or you're going to have your loan gets paid off or refinance or something. And now you have this substitution of trustee. Obviously it's not an estate planning trustee, but how does that work with this trustee that's coming up, and that you get this notice of, that a trustee has been changed out?
Yeah. And there are very, very strong, and for good reason, laws in place at the federal level that give very, very distinct responsibilities to the servicer. Now, I'm the servicer. You owe me money, and you're sending your check to John Burroughs Mortgage Company, and I'm servicing the loan for Fannie Mae. But I've decided that as the servicer, we're going to generate some income. And so we're going to take $100 million worth of loans, just like the one you have, all these vanilla flavored loans, and we're going to sell them off to another entity because that has an intrinsic value. We're going to make money. We made money servicing the loan up to this point. The new company will make money servicing the loan moving forward. So they have to announce and tell you X amount of days by law ahead of time when the transfer occurs, that the transfer occurs. And even if you make a mistake, and Gary, you write your check to John Burroughs Mortgage Company, even after I've already transferred the servicing, told you everything you needed to know. But even by law, if you make a mistake, it's beholden on me. I have to make sure I help assist to make sure any problems get corrected, and you can't get late on your payment because maybe you just didn't open that piece of mail and realize, oh, I mailed my check to the wrong place, or I tried to pay it online to the wrong place. So those servicing notices are critical. And yet the good news is the new lender hopefully will onboard it quickly. And the old servicer has the obligation of helping you if indeed you as the consumer even mess up. So we're not going to hit you with late payments and you can't be dinged. And if things like that do arise, there are federal entities in place to help solve those problems, because federal regs are very, very explicit on how those notices have to be done before, during, and afterwards.
Okay. So now that's the servicer, the beneficiary is always the one receiving the money or benefiting from the money, the lender, basically. The servicer is the one that's collecting the money for the beneficiary. And then we talk about like a trustee and the substitution of trustee. That's actually because the note may have been paid off with another servicer or another lender. And now the new lender's picking that up and they're the new trustee.
Well, and those trustees are the ones that are, and you hope when you have an active loan.
I'm trying to get for the listeners is people will come in and say, what is this? substitution of trustee. I didn't sell my house. I didn't do anything. Why am I getting a substitution of trustee notice? That's what they don't understand.
And it's because the note or that deed of trust was transferred to another entity.
Okay.
The trustee is the entity that's going to take over any problems when they arise. If you go into a foreclosure, you're going to know all about the trustee's role, because they're going to be the ones that you're going to be dealing with it at some level.
Right.
So when the loan gets sold, that means the trustee is probably changed as well, because the trustee for the new lender is somebody different than the original one there.
Okay.
This is nothing to get worried about. It's nothing to be crazy about. Nobody's trying to hack it into the title in your loan. They're just letting you know, hey, the trustee changed because who you owe the money to, or the servicer, I should say, not who you owe to, but the servicer changed.
Exactly.
It's very common too. Nothing
It's
to
very
lose sleep over.
And, we use that. The interesting thing to me is in California, we use the term mortgage all the time, and we're not really a mortgage state. We're actually a trust deed state. And that's why we have the term trust deed, and trustee. And I think, we're not really a mortgage state, but we just say it's a mortgage, it's a home loan, but a little bit different. We actually are a trust deed state where our mortgages, our loans, our home loans are secured by a deed of trust. So if that deed of trust moves from one lender to the next without our control, without our say, because we, that's just the way it works, we get a new trustee.
And when we get back from the break, I'm going to give you where the root words for what the word mortgage really means from the original Latin. Okay.
All right. Latin lesson coming up from John Burroughs. You're here on the Word on Wealth with Gary Quackenbush and John Burroughs. We are talking about mortgages, home buying and selling and all that stuff. Coming up next, we're going to talk about mortgage. What's the difference between a mortgage and a trust deed? Do we need to know? If you want help from me on any of your estate planning stuff, call me at 855-500-TRUST, 855-500-TRUST. We're here with John Burroughs.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com. You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's GQlaw.com, 855
You're live.
Happy third Wednesday, everybody. This is Gary Quackenbush and John Burroughs here on the Word on Wealth. John Burroughs is our favorite loan officer, and he is yours too. So give him a call at 760-944-6555 if you're thinking of buying a home, if you're thinking of getting a mortgage, a home loan, borrowing money from your house, getting a home equity loan, even reverse mortgages, even home equity conversion mortgages. Those are things that we want to talk to John about. 760-944-6555. We have lines open. You can give us a call at 888-344-1170. John promised that he would talk to us about, he would give us a Latin lesson. So I'm waiting to hear the Latin lesson from Mr. John Burroughs.
So the word mortgage, and we're all familiar with it, we hear it all the time, is spelled MORTGAGE. So it's really the root. And by the way, if you don't like this definition, you can blame Marty Schneider for me, because that's where I got it from years ago.
So far we've even gotten a spelling lesson. So this is good.
Yeah,
this is really good.
So the first half of it, mort, the mort part comes from Latin morte, which is basically death. Mort is basically death. And the second part of the word, GAGE, comes from gage, which is grip. So basically a mortgage is a death grip. That's basically what it comes down to. I know that's horrible, but I blame it on Marty, because that's where I stole it.
Okay. You know where I first learned about mortgages? Monopoly.
Oh, that makes perfect sense.
Right? Because you're
That's
playing
a good reason
Monopoly.
to play the game. Yeah.
That's right. You've got your title on, you've got the game, and you got your title of your property there, and you run out of money because somebody, you have to go, you went and parked in their property accidentally, and they've got 17 hotels, and now you got to pay them all this money. You can flip the thing over, and the house, maybe you bought it for 150, but you could mortgage it for 75. So I flip it over. It's now mortgaged. The banks gives me 75, and I can pay my fines. But, yeah, that's interesting. Death grip. Okay.
Death grip. Okay.
That makes sense to me.
I'm going to get a call from some English or some teacher as well. I'm sure about that. Going,
good.
What are you talking about? That's not correct.
888-344-1178.
Yeah, it's a joke, folks. It's a bad one.
888-344-1178. I think it's a good one, and I believe that's what it means. We're not in a death grip state. We're in a trust deed state. I mean, my goodness. The thing is, so the trust deed, that's the thing that's funny to me, is you borrow money from the bank or the lender, whatever the lender says, here, I'll loan you $100,000 and you can buy this house. What are you going to give me in exchange? And I say, oh, tell you what, I'll give you the deed to my house, but you have to promise to hold it in trust, which means it's going to go to a trustee. So my deed of trust is now held by a trustee. And like John, you were explaining, what happens if I don't pay on my note?
Well, that's called, according to the terms of the contract, which is your original note, you don't pay. Obviously, there's late fees. You go long enough, you get a notice of default filed. That's public record. That's when your phone starts to ring off the hook, because every looky-loo and or cash buyer who thinks you're in trouble is trying to lowball and make you an offer on the house. Opens up that can of worms. And if you wait long enough and don't pay attention to anybody, your property's going to go up for sale in a trustee sale. That's where they have the rights, because if you choose not to sell or you choose not to resolve your problem. Now, here's the crazy part. There are plenty of solutions out there, both regular lenders and or private money, where that doesn't have to happen. Ultimately, what are you going to do to lose a property in foreclosure these days? I think you have to really be asleep at the wheel or just out of your mind. I don't know how else to put it.
Yes,
how many properties in San Diego have no equity left in them? Worst case, you don't want to lose your home. Well, I'm just going to show them I'm just not going to do anything. Yes, and then they're going to go sell your property, and you will see zero in the form of equity in your home. So that's why we tell people, look, your worst case scenario, it's just a house. Hopefully it's not the family home that you're attached to, but if they go to trustee sale, you're walking away, you get nothing. You sell the house, it's that type of situation where it's urgent. You can get it sold and probably quickly, just pricing it right and solve your problem, take your money, put it in the bank and go on to, play another day.
Exactly. And I think that's really good advice. And I'm seeing an uptick in the number of foreclosures that we end up dealing with, just because during the pandemic, there were those COVID forbearances. So the lender, the trustee, was forebearing going through and claiming a default on the note, and they were forbearing for 6 months, for 12 months, for 18 months. I've seen people that have been in COVID forbearances for 2.5 years, haven't paid a dime on their home loan for 2.5 years. And now the lender is saying, okay, you got to catch up now. Those forbearances were not a forgiveness. It was a forbearance. So they got to get in and get a refinance. They got to call you and say, hey, now what am I going to do? Because the lenders are coming in, and man alive, I've seen some big numbers where the lender comes in and says, okay, your home loan is $500,000 and your arrearages from the last 2.5 years are, it was $6,000 a month times. So you're looking at, so your arrearages are like something like $20-something thousand in arrears, because he hadn't made payments in a couple of years, and they want it like right now. So, but it's the thing is, I totally agree with what you're saying. It's like, there's equity in most homes in California, especially in Southern California, in San Diego area, there's equity in your home. I mean, it isn't really possible to have borrowed enough money in the last couple of years, 4 or 5 years, to really make it so that your house is upside down. So don't wait to that point. John, the thing that I see, we see this sometimes, and whether it's, mom and dad have passed away and now the kids are dealing with the home loan and trying to figure out how to pay that off. But mostly I'm seeing it where people, they just get in trouble, and they look at the house as it's like this family thing. It's like, this is my home. It's not a house. It's my home. My world is here. My life is here. And they wait until the very, very last second.
Oh, yes.
Because they just, what you say is it's just a house. I subscribe to that too, because it's not like you can't get back into a house, but what they can't get back into is that same big house, because they're not going to qualify for a mortgage, because they're not paying their mortgage, because they don't have, income. But they need to kind of go, okay, like you said, it is just a house. I need to get my money out. I need to sell it, maximum dollar, maximum value, and then have that money. And then when things turn back around, use that for a down payment, and just be willing for the next couple of years to be able to, to rent or do something else. But it's really sad. I mean, I'm seeing people, and sometimes we're doing like a bankruptcy for them, like an emergency bankruptcy filing, just to stop the foreclosure. But the ones I'm seeing lately, John, the numbers are so big that even in a bankruptcy, there's no way that they can even catch up, because it's just so far behind. So I like what you're saying. I mean, sometimes you've got to get over the emotion. I deal with that in estate planning too. I'll get a lot of people that will say, okay, when we pass away, we want to make sure that the family home is preserved and it stays in the trust so that our kids can continue to live there for as long as they need to, especially because they're young and they won't have a place to go. And so I have to explain to people, it's a house, guys. And when mom and dad are gone, it's not home anymore. Because if your children are minors, they have to go to a guardian. Do you think the guardian that you've chosen is going to uproot their life, sell their home, and move into yours? Not going to happen. Or if you're claiming it's your family home, your adult children who are married, who have their own places, do you think they're going to say, oh yeah, let's hang on to mom and dad's home as, the family home? One thing is the property taxes are going to go up all the way up to a full assessed value. I mean, Jordan Marks will tell you that. But I just think that the thing, we really love our houses and we call them our homes. And it's like, we are so emotionally attached to them that I think sometimes we make not very good financial decisions around it. Hey, John, the one thing that you were talking to me about was, you, and I love this, you say, I've got a new toy I want to tell everybody about. That was one thing. And the other one was, another example of who not to appoint as trustee or the executor of an estate. So I'd love you to talk about those two things, but let's do this. Talk to us about the bad choice for trustee. And then we wanted to, if we get time before Noah puts the music on, I want to talk about your new toy. And we can talk about that after the break as well. You listen to The Word on Wealth with Gary Quackenbush and John Burroughs. John Burroughs' number is 760-9446-555. John, who should we not appoint as a trustee?
Well, first of all, this is a really, really tough decision to make sometimes. And unfortunately, and depending on the age bracket and the generational thing, and that's what it comes down to a lot of times is mom and dad are going to say, well,
1 minute.
so-and-so's the oldest, so I'm just going to have them be in charge. And I thought, well, if so-and-so has got a history of procrastination and doesn't really understand complicated things, and you may be making a wrong choice for altruistically in your mind all the good reasons, but unless they have a handle on exactly what's going down, there might be a better choice. Whether it doesn't even have to be a child, it could be another family member, it could be the attorney themselves. To say, hey, look, the kids don't get along, or I don't think they're all either competent and or have the skill set to be able to do it. No reflection on their intelligence, but if they don't know it and haven't been there, they need to look for assistance in getting the job done. And so please, and I beg you, and from personal experience in watching with my own clients, just because somebody's the oldest one in the family, that arbitrarily to assign
10 seconds.
Trustee of the trust. If you have any questions, a co-trustee, whether it be 2 or 3 people, not a bad idea at all. So just pay attention to who you're assigning to be the bus driver on that family.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We are here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com, 855-500-TRUST.
You just reminded John that, we have hard breaks here.
Hey, everybody. Welcome back to the show. This is so cool to have John Burroughs on. He is our favorite loan officer. John has been doing mortgages for people's homes, for people's houses for 40 years. And we appreciate that. And one thing you will know is if somebody's been in the business that long and has been as successful as John, he knows his stuff. So whether the market is going up or down, or no matter what you hear on the news or what your app says, or whether your phone turns red or green because the Fed funds is going up or down, we don't really care, because if you want the truth, call John. I'm dead serious. Just memorize this number, 760-944-6555, John Burroughs. If you want to email him and to ask a question, it's John Burroughs at apmortgage.com, apmortgage.com.
John.Burroughs.
John.Burroughs.
And
Okay.
Burroughs is spelled Burroughs, the proper way.
Burroughs. Okay.
Okay.
And
What's next?
all right. Well, John, what's next?
What's next?
Tell us about your new toy.
Oh, this is cool.
Okay.
I'm going to have fun with this. So we were talking last week about some of the new technology that's in place and some of the new toys that we have. So I got my first real hardcore training on it, and I'll be jumping into more the next few days. But we've got this really relatively simple application. Now I put this on my phone and put it on my computer, and it's called Simple Nexus. You don't have to know the name. It's just send me that app so I can check on my own house. So if you want to, have information about your own house, you can have a resource you can dive into. But if you're doing a loan, purchase or refinance makes no difference. So what I do is I simply send a link to the individual, to the client, and the realtors, by the way, if you're in a purchase and you want your realtor to be in the loop, this thing is like all the information you need about your loan, real life. As you progress, it'll send you out all kinds of messages. Everything's automated. I didn't even have to think about it. But the key is that I send you the link. Then once you've gone in there and say, yeah, I'm good with getting e-signatures and I'm good with signing up to get information, you can go in and fill out an application. You don't even have to complete the thing yourself necessarily. Go in there, fill out the application, short app, and then you've been logged into a system where now we can communicate by computer, or you can get notices on your phone. And if it comes down to getting paperwork somewhere, you can upload all your paperwork. You can view everything that's going on with your mortgage. You can get updates on interest rate if you haven't locked a loan. The key is it's that communication has been opened up in a really, really simplistic, and I looked at it, what it looks at from both the loan officer side, and part of the training is we want to see what does it look like for you, the consumer, when you jump in there. And it's really super simple. Name, address, phone number, or who you are. And if you start the loan process, you've given us permission to run a credit report. But the key is, though, you have a lot of connectivity, and the communication lines are, you don't necessarily have to go, I wonder what's going on with my mortgage today. Well, boom, just pop in there and take a look, see, and you're going to get real-time updates for exactly what's happened with your loan. I love it because it's a tool, as well as that you're driving around and you're getting pre-approved or pre-qualified for your home loan purchase. And you go in there and go, gosh, I'm looking at the list price, or I went in that open house and I wonder what it's going to cost me. And, you can go in and punch in a couple numbers right there on your phone, and bingo, you're going to get feedback right away. And I think just from the user-friendly part of it, as I see, it's just going to make the whole process a lot simpler. And once you buy into that software, and I don't mean buy in, poor choice of words, once you agree and log into that software, then you're going to have the ability to do 90% of the rest of the work for your entire mortgage at your fingertips, even off your smartphone. Pretty cool, huh?
That's really cool. I love technology, and I know people like apps and all that type of thing because it's just handy. You can do it as you go, and it gives you, we always want to be on our smartphones, so you might as well do something productive instead of playing games or watching, cat videos. But
cat videos. Did you say that?
Cat videos. That's kind of the standard, right? Okay, so I know, crazy cat videos, they are kind of funny. But so if somebody's going to get into the, use the Simple Nexus software, that's because American Pacific Mortgage uses it. So that's where they talk to you. And that's basically when they get into the process of, okay, I'm applying for a loan, they're going to do it, and you're going to help them get into your new software and figure it all out.
Yeah. And it's like I say, it's super easy.
Okay.
It's basically all I'm doing is I'm going to say, what's your name? What's your phone number? What's your email address? And then I'm going to go boom, 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 put that information in, push a button. And then all of a sudden they're going to get an invitation. Says, hey, did you want to log into this? It's that simple.
So this is the start of the process. This is like
the start of the problem. It's just, so would you like to join in?
Okay. You guys, 760-944-6555. I'm liking this because like even with my daughter, when you met with her and you talked to her about, how much she could afford, and that was a while ago, they're still looking and that type of thing. But this is very interesting because I think it's a good thing. We kind of get started. You have this little connection and then you can work through that app. I love it. 760-944-6555. You guys, your family members, anybody needs a loan because they're thinking of buying a house. Don't have them shop first. Have them kind of figure out what they can afford. It's like, if you're shopping for cars, typically you have an idea on what you can afford. Hopefully, you look through your budget and go, I can afford, I've got 10,000 down, and at the most I want to finance is I have no idea. Well, it would be nice to have the numbers so you can put it in your budget. Because if you don't do that ahead of time with home buying now, you're going to kind of get in trouble because there's activity, and you want to know where you are. You want to know if it fits in your budget. And that way, if you're starting to, the numbers getting a little bit higher than you anticipated because maybe there's a back and forth with the buyer, you're going to want to know when it gets out of your price range and when you should literally just say, okay, I'm done, because you don't want to get caught in the trap of, okay, well, you know what? Our numbers don't quite work, but we're going to force our way into this. You want to work with John first to see what your limits are and what's realistic so you don't get in trouble. 760-944-6555. John, can you talk just a little bit about, what does it look like for 2023? I know you're rubbing your crystal ball. You got it there in front of you. Look at your crystal ball. Tell us about what things look like from an originator's perspective coming up.
Yeah, it's kind of interesting because obviously the marketing that we're looking at and focused in an ever-changing market here right now, which I'm glad to say actually interest rates came down a little bit last week. I failed to mention that here, top of the show here. We saw, I want to say, almost 0.5% on rate for reasonable or next to no points down this past week, and it seemed to hold a little bit. But what I'm saying from the future, we're looking at purchases. Obviously, this is a purchase market for the most part. People aren't rushing out. Refinances have slowed dramatically. I mean, down just like, next to nothing. People are not picking up the phone unless they are need driven. And that's where, when it comes to the refinance market, there are a lot of circumstances that are need driven that are not rate driven at all. We've talked about inherited properties. That's one of them right there. It's like, hey, if you get that property in your name and there's a loan that has to be paid off, or you have to pay off siblings, or, whichever way you're going, it still means new financing. And remember, what goes up will come down at some point in time. So even though you're at a rate that might not be as palatable now, you're still a couple, 2-3 years down the road. We're getting the feel with the way figures and the economics are looking right now, these rates will trickle back down at some point in time. So you can always refinance at it, but need driven. Right now, I have exactly that. 2 of them are inherited properties. One was a husband and wife that got a property deeded to them, and it needed a dramatic amount of improvements. Well, they were able to scrape together the funds to do the improvements, but there's still a small lien on the property. So they're going to have to pay back those funds they did the improvement with. Totally need driven. So the difference between want and need are 2 different things. And of course, the purchase market is what it is. So I'm thinking in 2023, that's where I'm putting my focus when it comes to generating new business and clients. Let's face it, that's how I make a living, going down and bringing new loans in. And it's going to be with my realtors. It's going to be with my financial planners, with folks like yourself that are talking to clients about retirement issues. And, the
2 minutes,
it's a reverse mortgage, or the fact that they have to pay the loan off on the house regardless of rates are. So my focus is looking not so much rate, but looking at where the market is. And I think 2023 is going to be all about that. So finding those needs and helping people fill those needs. I think that's the real key.
And what I'm excited about is this is before 2023. In December, you are opening a Mission Valley office.
Yeah, we the property's been secured already, but I won't be moving down there because we're, with all the changes in our company, and we're closing offices, not shutting them down in the way of not doing business. Just it's a matter of leases, and we've got X amount of bodies. There's a lot of us that made the change, the transition to American Pacific Mortgage. And so we have to all right, where's the office space at? People have a place to work. A lot of people do work for home.
1 minute.
Not one of them. I don't do well with that. So I said, okay, where have you got an open chair? Where have you got an open office for me? So we'll be down that new Mission Valley location starting the 1st of December. I'm kind of excited about that.
Well, John, I'm really excited that you're on the show with us, that you're a partner in the show with me, so that every Wednesday we can talk about the home loans and the mortgages and the trust deeds that we have on our properties. John's got the new tools. He's with American Pacific Mortgage. He's a loan officer whom we love and trust. So give John a call, 760-944-6555. If you want any help with your estate plan, choosing a trustee, like we talked about, putting together the will, the trust, getting your house put into that trust, anything like that, I'm happy to give you a free initial consultation. My number is 855-500-TRUST, 855-500-TRUST. We'll be back tomorrow here on The Word on Wealth, same time, same station with Anthony Wright. We're going to be talking about money, financing, and investments right here on The Word on Wealth.
Tell a friend about the Word on Wealth, featured since 1995 with financial solutions attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Gary is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help you preserve your family's financial future. The information you
I reached out to